What's up, beautiful people? It's your boy Judeo, and I'm back again with a new video. Today we're going to be checking out a video you requested for. This one is titled Cathie Wood on the Fed, Economy, Coinbase and Tesla. It's going to be my first time checking this one out, but I trust it's going to be interesting since you asked for it. Anyways, without wasting your time, let's get to it.
Cathie, the key debate on Wall Street, what everyone is discussing is the Fed going to continue hiking rates, or are they going to stop and turn around and come back down next year? What do you think?
Keep hiking rates.
We think the latter.
That's what I think.
We're getting all kinds of signals that the economy is very weak. I know a lot of people are focusing on last week's big employment gain in non-farm payrolls. But if you look at household employment, which is a much broader based survey of employment, that has been flat to down for the last 4 months. If you look at claims, we've never seen a faster increase
Is it true?
Off the bottom than we've just seen. We're up roughly 50% from the lows. Many people, I don't think, have taken a close look at that. And we're hearing one layoff after another. And we know the Challenger survey says that layoffs are up 55 to 60% year over year. And I think this is all related to inventories. We have a massive inventory glut. And so I think that the last few hires, I think companies were really happy to get them because labor was in short supply for so long. But I think that
now there's an inventory head.
Labor was getting paid free money, so they were not in short supply. They were just not working.
The unwinding.
Yeah, Cathie,
Yep.
it reminds me, the last time I saw you on Bloomberg TV, you were talking with Ed Ludlow out of Bentonville, Arkansas, and you said to him, we have a real inventory problem. Walmart and Target had just been out with numbers that were concerning in terms of the buildup of product, and you said deflation is more of a concern than inflation. Do you still think that after the big prints that we've seen, and we're still expecting, for example, 8.7% headline CPI on Wednesday?
Yes, I still think that because the evidence is piling up. Now, the CPI and in some measure, the PPI, both of those are lagging indicators. The Fed is driving policy off of lagging indicators. If I look at Dr. Copper, the commodity with the PhD, it had been trading for a year in the $4 to $5 per pound range. It's now down to $3.50. It's had a decisive break. And if you look at how that's going to feed into the indexes, it'll feed in slowly, to be sure. But just month over month, copper is down roughly 20%. And year over year, it's down roughly 20%. So that's the activity side of things. If you look at the real inflation gauge out there, it's gold. Gold prices peaked in August of 2020. 2 years ago. And we've been in a trading range,
pandemic?
to be sure. We're at the low end of that trading range now.
Right.
If the Fed continues to tighten, we believe the dollar will turn back up and these commodities will continue to fall.
So, Cathie, if we have disinflation coming, and in your view, the economy in a very weak spot, big debate right now is whether we're currently in a recession. Obviously, it's up to the NBER to officially declare that, but curious to hear your take on where we are currently.
Yes, well, we believe we're in a recession. 2 consecutive quarters of real GDP declines is the beginning of that definition.
It's troubling.
3 consecutive months of declines in leading indicators, which we have now, would suggest the same. Now, I think the differences are, we see an inverted yield curve, and that, of course, is also a warning sign. I think our point of view is that this is going to be a severe inventory recession, but we didn't have the systemic excesses like we did pre-08-09 in the mortgage market. So it's an inventory recession here. And while most economists are saying, the inverted yield curve points to a recession maybe next year, we believe we'll be coming out of it next year. Now, I think the big question is what's going on in China. I think some of the commodity price decline has to do with China unraveling in some sense from a cyclical point of view. I mean, they've got their foot on the brake in many ways. They're trying to let it off a little bit here and there. But I think that the real estate downturn in China is 30% of their economy, 75% of consumer savings. I think
that's a lot. Yeah, I was just watching that on is it Graham Stephan? Yeah, I was just watching one of these channels. Like it wasn't looking good. I don't know how China is gonna come out of it, but it wasn't looking good. So basically, the real estate game was played as a Ponzi scheme. I mean, not by China's government, but by the real estate companies, where they buy a property or they take loan to develop a property, and then they develop to some extent, not completely, and then use is it equity or just show what they've done and use that property that isn't complete to get another loan, and then that kept building up. So there's literally, like, should I say, a forest of uncompleted buildings or incomplete buildings. English is difficult. I don't know the right word, but there's just like lots of buildings that are not complete, and people are now looking for their houses because they got money from people, so people are looking for the houses they paid for. So yeah, it's been some trouble. I heard the Chinese government pumped in some money to help improve the process, but I don't know. We'll see.
To control it the way they thought they were.
Cathie, it's Eric here. I asked Twitter for some questions. I got a good one, and I agree. This is a good question. A lot of people have it. If you believe we're in a recession and you believe the Fed is going to go on a sort of hike-raising path, why not go to cash? Why stick into the fund? It's an actively managed ETF. You can do whatever you want, and I guess some people wonder why not have more of a cash reserve.
We are going to be 100% invested in innovation. That's who we are. This is what we're paid to do. This is what we say we are. And we think that innovation is going to be a critical allocation in the years ahead as the world moves rapidly. And it tends to, innovation tends to gain traction during tough times. Innovation solves problems. We have so many problems right now. We've got the supply chain problems, which we're still hearing about. We've got energy and food prices up because of the war, really hurting consumer purchasing power. And so I think better, cheaper, faster, more productive, more efficient, more creative is going to win. That's what innovation is. So we think most asset allocators are short innovation. And I don't mean NASDAQ 100. We don't think that's truly disruptive innovation. We believe that our ARC is more the old style NASDAQ than the NASDAQ is today, because that's all we focus on.
Cathie, I thought there was a really interesting idea floated on Twitter about a perpetual motion machine. There is TARK, T-A-R-K, that is 2 times ARK leveraged up ETF. And we were thinking if you bought shares in TARK, then they would have to turn around and buy ARK. And with those increased flows, you could buy more TARK, and it would just really be beneficial to your shareholders. Have you considered it?
No, we have not considered it. That is a swaps-based product, so there's counterparty risk there. And so we have no intention of doing anything like that.
At least think about
looking
it.
Looking at your fund lineup, you did close your first fund, or you're planning to liquidate the Transparency ETF. And what was the rationale behind it? Was just because there was a lack of asset growth? And I also wanted to ask, that fund had an ESG component to it. It had a filter for ESG metrics. Elon Musk called ESG an outrageous scam. And I'm curious, I know you're a fan of his, what you think of that sort of characterization of ESG.
So that characterization of ESG, what I've always said when people have asked us about our portfolios, I've always said they are intrinsically good for the environment, socially good, and we have a scoring system around governance. So we certainly are focused on doing the right thing, which is what I think ESG is all about.
Her body language is saying the opposite though. I don't know if I'm the only one noticing, but gestures and expression is kind of like, it's a little bit off while she's answering that question.
I think it got way out of hand. And there was a lot of slapping lipstick on a pig and, basically any portfolio being kind of promoted as ESG. So I think I think the misallocation of capital was quite extreme. And as I do the whole index-based phenomenon, the idea that we should look to the past to manage assets for the future just doesn't make any sense to us. So,
And Cathie, I want to switch gears pretty abruptly here and talk about ARK, the business, ARK Investment Management. You founded it roughly a decade ago, almost a decade ago, and ARK at this point is synonymous with Cathie Wood, which I think is the definition of key man risk. And I'm curious at this point, have you thought about any sort of succession plan?
Yes, so I have a very deep bench in terms of talent. We have just promoted within the last 6 months 2 of our senior analysts to become associate portfolio managers, and so they're working with me very closely. When I started managing money, I continued to do research as well. I think it's a very good discipline for us.
Yeah, for sure. Fundamental
and even today,
research.
I'm doing still a lot of research with our research analysts. So I think most of our analysts, many of them having been with me for the last 5 to it's almost 9 years now, have been taught, or I've been teaching them how to do things the ARK way, because really we're not going to find talent or out there, seasoned talent, because really very few companies are doing what we do right now. The kind of top-down research that we're doing, the 5-year investment time horizon, the kind of bottom-up research as well. And as you know, we're starting to put our models out there because we think there are so many inefficiencies in research and investing when it comes to innovation. So you've got on GitHub, any of you can go check it out. We've got Tesla, Zoom, and Roku now, with others to follow during the next few months.
And let's also talk about the future. You have an interval fund planned, and we're all intrigued by this. What should we look for in this? And obviously, less liquid assets has been a tough time this year for that. And so I wanted to know anything you could tell us about the timing of that and what this fund is, what the purpose of it is.
Well, we're still in registration, so probably better than most. This is a 40 Act fund, so we really cannot say much. And really, my compliance department has said, don't say anything until we're effective. And we're thinking that will be fairly soon. But again, this is in the SEC's hands. The questions we've gotten seem to be de rigueur. So stay tuned. I'd be happy to come back on and talk all about it when we're effective.
Cathie, as you know, Eric went to Twitter. He asked what people wanted to hear, and I loved this question. In your view, what is the best case and worst case scenario for ARK-K returns over the next 5 years?
That's a good question.
In terms of returns, I have to be very careful in terms of, we can't promise anything. But if you're talking about the backdrop, if inflation were truly embedded in the system, 70s style, that would not, as the markets were adjusting or would be adjusting for that would not be a good time, because interest rates probably would go up a lot. In fact, one of the really reassuring developments recently has been the drop in long-term interest rates. The 10-year Treasury yield back to closing in on 275. It has not been able to maintain anything above 3% for very long at all. So the bond market is basically saying, no, this is a very good time for innovation. However, if it reversed and went the other way, that would be bad. If our outlook for deflation is correct. Cyclical deflation and secular deflation. Secular deflation associated with technologically enabled innovations. That's a good deflation. That's not a bad deflation. If those two are correct, that would be the best environment, I think, for.
That's a nice way to answer it. It makes sense the way she broke it down, but I don't think that was the answer the person was looking for. That person was expecting, like, we're gonna have 10% ROI. I'm sure that's what the person was expecting, but I like her breakdown.
Ask about your view on Tesla in 5 years. I'm a car guy and I've driven a Tesla. Very impressive performance, but
people are still arguing Tesla does not have a valuation. I've heard someone say it doesn't have any valuation. Some people are saying the valuation is blown, but some people still argue it's right on the value. You know, Tesla is right on the value.
I mean, Volkswagen has a lot of money. General Motors and Ford have a lot of know-how in this industry. Everybody's going to come at them. And isn't Tesla going to be, you know, Friendster in 5 years compared to many different new Facebooks?
Well, we absolutely not. Tesla, if you're analyzing cars, not by brand, although its brand certainly has
a reputation,
done wonders in the last few years. But if you look at range and power, the combination of those, most
efficiency
of the auto manufacturers, unless they want to lose money on the cars, most are not going to be able to keep up with or to reach Tesla's
production
combination. So that's very important from a performance point of view and a range.
But there are some companies in China that are really coming up. Like there are some car companies now that can charge in, some cars in China that can charge in, I think 0 to 80 in 6 minutes, I believe, or 8 minutes. Yeah, there's a car like that in China right now. It's coming into production very, very soon. Like very, very soon. I feel like the one in production right now is 0 to 80, 80% in, I think, 14 minutes. Yeah, China, the technology game in China is crazy. Like they just want to like subdue Tesla and American cars.
Point of view.
Watch out for China.
Branding is something different. These other auto manufacturers have brands and a lot of brand loyalty. But I think as consumers start to shift from gas-powered to electric and look at the specs of the different cars, they might still be persuaded by brand only, but they won't have as good an electric vehicle as Tesla will provide. And actually, we've been studying the CapEx schedules for traditional automakers versus Tesla. Tesla is now going, within the next year or so, is going to spend more on electric vehicles, if it is not already, than either one of those companies. So here were the behemoths where, 5 years ago, when most people were saying, Tesla doesn't even have a shot to exist. It's going bankrupt.
Now that's long gone now. Old story.
Spending as aggressively as it can to roll out new plans. And we think they'll announce another one before the end of the year.
And Cathie, I got to ask you about crypto. ArcW holds GBTC and Coin. So you sold a little Coin. I want to get your take on why you sold Coin and what your feelings about that stock is. And also GBTC. Obviously, this is a way to get exposure to Bitcoin, but it's been in a severe discount. Why not use, say, BitO or even MicroStrategy, which is a proxy for Bitcoin?
Okay, so Coinbase, why did we sell some? On the day that the insider trading was announced, that's not why we sold it. Actually, it was Coinbase who surfaced or exposed what was going on there for the SEC. But the SEC did weigh in and say, we think that at least 9 securities, I think it was nine of the crypto assets on Coinbase's platform are securities. So there was just a little bit more uncertainty. Okay, how many of these will they have to delist if they decide not to register with the SEC, or if they register with the SEC, how will that change their business model? So you saw that we sold very little, but we did it, we were in a day where the markets were very volatile and Shopify was down 15%. a little bit of a thesis risk increase in coin, so we swapped some. It was
okay, that was actually pretty smart.
Basis points, not a lot. In terms of GBTC, well, we started in 2015 when Bitcoin was at $250. So that gives you a sense of how low a cost base we have, and we've continued to hold it. We wouldn't. I don't think we could use BitO and MicroStrategy. We want the underlying Bitcoin.
Okay, that was a pretty long video, but very educative too. I enjoyed it. I like it. Thank you guys for requesting that one. Cathie Wood on the Fed, economy, Coinbase, and Tesla. I feel like she made very, very good points there. She made very good points, especially going back to like Tesla, and even what she said at the end. Shopify was down. They sold the coin to balance up. That's pretty smart, you know. And she answered the question the right way. She wasn't overly promising stuff. I mean, she wasn't even promising. She was just stating the facts and how they relate to what she's doing. So yeah, I think that was good. And also, I really support her point. I'm not like a Tesla fanboy. As a matter of fact, I don't really care about Teslas like that. But I believe it's a good company. And I don't think, because people keep saying Mercedes is coming, Audi is coming, Porsche is coming, and you know, all of those things. But they wouldn't really catch up with Tesla. I think the companies Tesla should be checking for, they're the companies in China. Those are the companies that are making groundbreaking technology, like crazy things. I heard like there's a new battery set where you kind of like lays flat on it, you kind of like layering, so with that point you can charge quicker. Yeah, like the companies in China, the innovation going on in China is crazy. So even though China might be facing like a tough time now when it comes to real estate, but we can also see the technology might be improving. Might be, you know, I'm not certain. That's not like a fact or something I've researched. I'm just saying that the technology seems good and could help. And if they invest in that, it could really help the real estate side. But anyways, I had a good time watching that video. Let me know what you think on everything Cathie Wood said. If you think she lied about certain things like the recession. She said they were in recession, but are probably out right now. So if you think that's the case, you know, let me know. And if you agree, if you disagree, share your thoughts and share your concerns. Let's have a conversation in the comment section. But this is the end of this video. Don't forget to smash the like button, subscribe if you're new to the channel, and I'll catch you on the next one. Have a beautiful day. Peace.